What is up guys, my name is Ignas, welcome back to the channel. A few weeks back, Microsoft announced to be buying Activision Blizzard for just under $70 billion. And the difference between the buying price and the company's market cap sent the stock soaring. So on January 14th, the price closed at $65.39, and after the news, the next day it closed at $82.31. At the opening we saw a 30% move up. It did lose some of the gains during the day, closing higher for 25.88%. Even with some selling in the last few weeks, the stock is still now higher for 20.6%. Anyone who started a position not earlier than November of 2021 should currently be up for at least 10%. So buying into ATVI in the last few months paid out. But it looks like this acquisition could lead to problems for competitors. And investors in one such company are already showing weak hands. The company I'm talking about is Sony Corporation, ticker symbol SONI. On January 14th, the stock was trading at $124.79, and on those Activision news, the stock dropped to $115.84. So in one day, the stock lost almost $9 per share, or went down for 7.17%. And for the past few weeks, it kept on inching lower, down 11.15%, at the current price of $110.90. But differently than Activision, Sony was a consistent winner over the years, gaining over 250% in the last 5, going from 30 to over $110 per share. So today we'll take a look what the upcoming earnings report could bring, then we'll check into the history of financials and fundamental ratios, after that what analysts think about the stock, then the moves of Superinvestors, and lastly we'll check into the technicals of the price chart and my own position in the eToro portfolio. I believe that this will be an interesting name to look into, so let's start. Sony is scheduled to report third quarter fiscal 2021 results on February 2nd, which is in 2 days as I'm recording this video. Unfortunately, analysts already predict that there should be decent results. The Japan-based company is expected to have recorded year-over-year higher revenues on the back of sales growth in the game and network services and pictures segments. Also, solid traction in the electronics products and solutions and music segments is likely to have boosted performance. Then they are also talking about the benefits from an increase in sales of televisions and smartphones, how the music segment is likely gained from a rise in sales of recorded music and visual media and platform, and then a supposed increase in revenues from paid subscription streaming and advertising supported streaming services. So with many metrics considered to increase, we could probably expect a poor earnings report, as they state that their proven model doesn't conclusively predict an earnings beat for Sony this time around. And their ZAX rank is currently at a 4, which is meant a sell. So I guess there's not much of a reason to rush now and buy the stock before earnings. But now let us take a look into the company's performance over the last 5 years. These are the revenues for the trailing 12 months. So back in 2016, revenue was at $69 billion. Then by 2017 there was a decent rush to $73 billion, and in 2018 up to $79 billion. After that, revenues has been moving sideways for 2 years, going a bit lower to $77.6 billion in 2019 and $76.9 billion in 2020. But then they had their largest quarter ever by the end of 2020, bringing $25.9 billion in 3 months. That really helped on the trailing 12 months, as now they are reporting $88.5 billion for 1 year in revenue. And by the looks of the cyclicality, we are looking into a very decent quarter ahead. Another metric I want to take a look into is the price to earnings. So back in 2016, earnings per share were in the negative, so the price to earnings was at 0. Then in 2017 we had the PE ratio at 11.8, with the price dropping in 2018 and earnings increasing. Price to earnings went down to 8.37. Then in 2019 the price went back up, so the PE ratio increased to 14.11. In 2020 price was surging, but there was also a decent increase in earnings, so the ratio stayed flat at 12.36, and now recently the price has been moving higher, so the price to earnings increased to just under 16. So it seems that buying the stock right now wouldn't really provide us with the best result. Price to earnings was over 20 back in 2017, but other than a quarter back in 2021, we didn't see a price to earnings ratio over 15 in the last 4 years. So it seems that there have been plenty of opportunities to get the stock at a better valuation. Next part are the shares outstanding. So in 2016 they increased it to 1.28 billion shares. The number remained through 2017, and in 2018 there was a bit of an increase to 1.297 billion shares. But the company did take some shares out. In second quarter of 2019 they decreased it by 1.47% year over year. Third quarter another decrease for 2.54% year over year, and then again a decrease of 3.24%. So we were left with around 1,255,000,000 shares outstanding. There were a bit more changes for 2020, but now in 2021 they reported 1.252 billion shares. So in 2 years they managed to decrease the number of shares outstanding by around 50 million, which at the current price of $100 would be a capital for buybacks of around $5 billion. Now I would like to take a look into the dividend yield history for the last 5 years. So in 2017 that was at around 0.55, then in 2018 it decreased to around 0.5, 2019 we saw an increase to 0.65, that remained the case in 2020. Unfortunately in 2021 with the price surging, dividend yield decreased to 0.42, and currently Sony has the dividend yield at 0.51%. So now we are able to calculate that in the last 5 years, the average dividend yield was at around 0.55%, meaning that in 2017 we had it at just below the average, then in 2018 it dropped almost 20% under the average. The best time for the yield was in 2019, where it was at 0.73%, up 32.27% over the 5-year average. Another decent option was 2020, where the yield was 25% over average, but unfortunately the worst time to buy in was last year with the yield at 0.42%, which is almost 25% under the 5-year average. With the price dropping recently, the dividend yield has increased a bit, but we are currently still 7.6% under the 5-year average. So it doesn't appear to be the best time to be buying the stock for just the dividend yield. Now let's take a look what analysts think about the stock. So these are here the price predictions from analysts for Sony stock in 1 year. I've picked the ticker from the Tokyo Stock Exchange, so the numbers here are in Japanese yuan. Out of 22 price targets of analysts, they predict that on average in 1 year the price should be at 16,776 yuan, and the stock is currently trading at 12,720. This suggests that in 1 year analysts predict that the stock should be up for 31.9%. Now let's take the earnings per share angle. So on average analysts suggest that next year Sony will bring 727 yuan per share. If price to earnings remains the same and earnings increase, that means that in 1 year the share price should increase by 14.1%. So it seems that both price targets and earnings estimates suggests decent growth for the company stock. Now let us take a look into Superinvestor activity. Unfortunately right now only one portfolio is holding Sony. ClearBridge Value Trust currently has 250,000 shares, which at the current price of $111 makes a position of just under $28 million. And it is only 1.52% of their whole portfolio. If we take a look into the 5-year history, it seems that only 3 funds bought in and sold out of the name. It's not clear exactly if they made money or not, but it appears that smart money doesn't really like the name that much, or at least not the ticker we are using. So what do the technicals show should we consider buying into Sony right now? In November of 2021 the price reached over $120 per share and has been moving sideways for over 2 months. But then on the 18th we had the Microsoft Activision Blizzard announcement and the price dropped to $115 under the 50 and the 100-day moving averages. Then another day passed and the price dropped again, now to $110, which was $1 over the 200-day moving average. The relative strength index went under 30 at 28, and the gap between the MACD lines was on the increase. The stock was going over the 200-day moving average for 5 trading days, but then on the 27th dropped to $103 per share. The relative strength index was again under 30 at 26, and the 12-day moving average of the MACD turned back back down. So on this weakness and the price dropping under all the moving averages, I decided to start the first position in. We will check on that trade on eToro shortly. Past 2 days were quite decent. The price is now over $110 per share, moving over the 200-day moving average, which means that our position should be now in the green. And the prediction seems to be correct. So the position was started on January 27th with $100 at an opening price of $105.65. Now with the current price of $110.39, the trade is now up for 4.49%, making it valued at $104.49. So let's do a quick recap of what we found. There are already high expectations for the upcoming earnings, so that could prove to be a disappointment. On the other hand, revenues has been increasing, and especially the last 4 quarters were very consistent. With the price surging last year, we do now have the highest price to earnings ratio of the last 4 years. It seems that Sony has been putting some money for buybacks, as in 5 years the number of shares outstanding decreased by around 4%. But going back to the last year's surge in price, the current dividend yield is now almost 10% under the 5-year average. Analysts seem to be quite confident with the name, as in 1 year the price is expected to go up from 14 to 32%. But Superinvestors do not share this confidence, as we saw only one portfolio currently holding and recently trimming on the position. The price was just under the 200-day moving average, so I believe there's a big chance that it will go under it again. And with earnings close by, a drop after that could prove to be a great buying opportunity. So that was it. Don't forget to support the channel and leave a thumbs up under the video. So what do you think? What is your opinion on Sony? Are you holding any shares? Share your stance in a comment below. If you would like to get notified exactly when I buy or sell any stock, then consider memberships. By becoming a member, you will get access to Discord, where I share my stock watchlist and all the buys and sells exactly when I do them. This could be a great option to track my moves closely. Last week I shared a few names I'm bullish on, so if you would be interested in those, then click on a video that is currently on the screen. And that was it from my side. Thank you for watching, and I will be seeing you all in the next one.